Good morning and welcome to another edition of FinTech Focus. I'm James Hounslow and I'm delighted to be joined by Yianni from Trendrating. Good morning.
Good morning to you.
First of all, do you want to tell the guys exactly who you are and what you do?
Sure. So as I said, my name's Yiannis. I am head of EMEA sales for Trendrating. So I've been with the company for a little bit over 2 years now. So my responsibility is to run sales and marketing and client services across the EMEA region for Trendrating. We're an early stage business. Mm-hmm. We've been going around about 4 years now since we launched. So we're in the process of obviously getting our name out there, educating the market a little bit, obviously bringing on board new clients, and of course servicing our existing clients as well.
Excellent. So with that in mind, who are Trendrating?
Sure, good question. So we provide critical analytics to portfolio managers. Mm-hmm. So we believe that the essence of successful investing is to be in synchrony with specific trends, whether those trends are at the market level, sector level, stock level. Yep. And what we provide is intelligence that allows our clients, active portfolio managers, to be able to identify and capture those trends. And we believe that if they capture those trends and act on those trends, they will be able to essentially separate the winners out from the losers in their investment process, make more informed decisions and improve their performance.
Data on performance of equity mutual funds has commonly underperformed against the benchmark over 3, 5 and 7 year periods. Can this be fixed?
Sure. So, I mean, you're absolutely right. The mutual funds, by and large, have underperformed consistently over a 10-year period, actually. And most experts would point to the fees being the issue, the fees that active managers charge. But we strongly disagree with this, actually. I mean, let me point you to a particular fact. In the market, there is a broad dispersion of performance. Whatever market you look at, there is a very wide dispersion. Effectively, the 80-20 rule applies to stock returns, market returns, where the majority of returns are generated by the minority of the market. I'll give you a very specific example. The S&P 500 in 2017 returned about 20%. But if you look at the top 20% of performers, the best performers of the S&P 500, they actually delivered an average of 61%, whereas the bottom 20%, the worst performers, delivered a negative 11%. They lost 11%. So there is a very broad distribution, and this phenomena exists every year. We've done analysis actually over the last 20 years, every year over the last 20 years, in whatever market you care to look at, that this wide distribution of performance happens. Now, we believe that this actually presents an opportunity for active portfolio managers. If you're able to identify that top 20%, then of course you're likely to outperform. The difficulty, of course, is it's never the same 20% that outperform every year, of course. But imagine if you're a portfolio manager and you had access to intelligence that allowed you to accurately and consistently identify that top 20 or 30% of performers in that year, i.e. pick the winners, and avoid the bottom 20 or 30%, then you would almost certainly outperform the benchmark. And bear in mind, the benchmark is the average of the entire market. It's the average of the winners and losers together. But if you're able to identify the winners and avoid the losers, you're almost certainly going to outperform the benchmark. So this phenomenon exists, and we believe that intelligent data analytics can help managers to be able to identify those winners and losers.
And so I guess you guys got the solution for that.
Yes, exactly. I think part of the problem for portfolio managers is that they rely on fundamental analysis on which to base their investment decisions. And this is obviously very traditional. It's
Yeah.
been in place for a very, very long time and very widely used. But we know that in recent years that prices have become detached from fundamentals. Okay, so fundamentals don't necessarily drive prices. Prices are actually driven by a number of different factors. So you can't rely exclusively on analysis of fundamentals to be able to do your stock selection effectively. And we know that most mutual fund managers rely on fundamentals and broker estimates on which to base their decisions. And unfortunately, it's a fact that 80% of them underperform every year over a 10-year period. So this is the issue for portfolio managers, the majority of them today.
If this is true, then what's the problem?
The fact is that most active managers rely on fundamentals to make their investment decisions. And we know over the last few years that prices have become detached from fundamentals. The analysis of fundamentals is not the only or necessarily the best way to make investment decisions, because there are a number of other factors that drive prices. So the use of fundamentals alone is not necessarily going to enable you to outperform. And we know that the majority of mutual fund managers use or base their decisions on fundamentals and broker estimates. And of course, over 80% of them underperform, and we know that for a fact.
Okay. So what's the solution?
I think we believe that the solution is adding new, insightful analytics to the investment process. We believe that a very good fit, a very good complement to fundamental analysis is this concept of trend capture analytics. Yeah. So going back to the phenomena that I mentioned earlier on about this distribution of performance, we believe that intelligent analytics can help, when used in combination with fundamental analysis, can help to separate the winners from the losers. And if you're able to do that successfully, then you will be able to almost certainly outperform the benchmark, outperform the market on a consistent basis.
Okay. So are you talking about price momentum analysis?
Well, we prefer to call it trend capture analytics because classic momentum does have some limitations. There's no doubt that classic or traditional momentum analytics can help to provide outperformance over a long period of time. But also, just by the very nature of classic momentum, it can be high risk during periods of drawdown when the market goes into reverse, for example. What we have is a different approach, actually, to trend capture. We have developed an innovative way to capture trends early and accurately. And this is very different to classic momentum. So what we do in our rating system is that we rate securities by the direction of their trend, by how well established the trend is, and also by how strong the trend is. So this set of analytics can be used as a complement by fundamental managers, active managers, to help boost their performance. So we're not necessarily saying that active managers need to change their approach. What we're providing is a new set of analytics that have been designed actually for fundamental managers to complement their existing process with this new set of trend capture analytics.
Okay, so speaking of that, how are your clients in the asset and wealth management space actually using your solution?
Sure. So, I mean, we've been launched about 4 years, and in that time we've built up a very strong client list, which consists of many of the largest managers in the world, but also our client list consists of small and mid-sized asset managers, wealth managers, family offices, hedge funds, advisors, and so on. So our approach, our solution was designed to be used in a number of different ways in the investment process. A lot of our clients are using it to rank their investment universe, to rank a universe by the direction of the trends of the securities in the universe, and also by the strength of their trends. And we know from our analysis that if you're able to identify the stocks with the strongest uptrends, they will almost certainly outperform the securities with weaker trends. So our clients are using trend rating, our ratings and scores, to rank their universe. Now, unlike a lot of other data providers out there, we provide actionable analytics.
Okay.
And that means that when clients rank their universe, they're able to, in combination with their fundamentals, they're able to actually construct a portfolio directly from this ranking. So I think that's one of the key ways that clients use us. Another way that clients using us is in the area of risk control, actually. Yeah. So we are able to give a portfolio manager a rating for their entire portfolio, a trend capture rating for their entire portfolio. And this shows the portfolio manager how exposed their portfolio is to negatively trending stocks or weaker trending stocks. And this is very important because we know from our analysis that stocks that are in negative trends or perhaps in weaker trends will tend to cause a drag on the performance of the portfolio. So as a portfolio manager, it's very important to be able to understand at any particular point in time to what extent am I exposed to negatively trending or weak trending stocks in my portfolio. So it's a very critical health check that we can do. And this will help clients avoid significant drawdowns. And I guess another key way that our clients are starting to use us more and more now is in the more sort of macro trend area. So we also provide ratings for sectors, for markets, for regions. And so clients can look at a more macro perspective to understand where is money flowing, which sectors is the money flowing into, and where is it flowing out of, which markets are performing better than others, which regions are performing better than others. And this kind of intelligence at the sort of sector market level help them make better allocation decisions as well.
Okay, so that's really interesting to understand how they're using it, the advantage there. But what are the benefits of having trend rating being used in these organisations?
Sure. So, I mean, very simply, our clients are benefiting from improved performance, and that's really our reason for existence, is to help our clients improve their performance. And it goes without saying, if a client improves the performance, they will grow their assets under management. If they grow their assets under management, they will of course generate higher fee income as well. So it's very important for us to work with our clients to ensure that they are implementing it and complementing their process so that they can benefit from this. But it can have very significant impact on the bottom line, on performance. Another area is in, as I mentioned before, in the area of risk control as well. And this is kind of particularly important this year when we're seeing a lot more volatility. There's a lot of uncertainty. So clients want to be able to understand, where the risks are, not only in their portfolio but in the market generally, so that they can avoid significant drawdowns. More broadly, I think a lot of our clients are telling us that the use of trend rating adds discipline to their discipline and efficiency actually to their investment process, whereas before they perhaps relied on fundamentals. And it's very difficult to measure how successful your fundamental analysis is. But our ratings are extremely transparent. They're very measurable. So this adds this layer of discipline, measurability, and transparency actually to the investment process. And transparency is something that the clients of the managers are actually demanding. I think this is the way the market is moving, is that the end investor is demanding more transparency, more accountability from the people that are managing their money, and trend rating allows them to implement a layer of intelligence that is measurable, it is systematic, and it is extremely transparent.
Okay. In a time now around technology where analytics is becoming a vital part of business. Where do you see you guys going over the next 12 months?
Sure. So we want to be the leader in trend capture analytics. And in the short space of time, I think we have developed ourselves as the leading provider of trend capture analytics. We have a very innovative approach that we believe that is not commercially available out there anywhere else. And there's lots of evidence to prove that our analytics are extremely effective. They're very accurate, they're very effective, and they really do help the bottom line. So we essentially want to be known as the leader in trend capture analytics. And although we've been launched for 4 years, we are constantly developing our solution. In fact, there's a new version of the solution that's going out later this week, actually, that we're informing our clients about. And this has some major steps forward in some of the functionality and the analytics that we're making available. So we want to be the leader, but we also want to continue to develop, and we want to be known as the go-to for trend capture and any analytics around that.
So yes, have you received any reluctance in the uptake of your solution when talking to these asset and wealth managers?
You know, I think it's fair to say that over the last years, there's definitely been some inertia in the marketplace. I think people even within the industry, within the asset management industry and wealth management industry would agree that there is a certain amount of inertia. And that's understandable, it's inevitable. A lot of managers tend to rely on approaches and techniques that they're comfortable with, that they're familiar with as well. But you know, we are seeing this changing, particularly over the last couple of years. I think we've seen a lot of asset managers realizing that they have to implement new technologies and new approaches and new types of analytics into their investment process, because relying solely on fundamentals is obviously hasn't worked. You know, we know that from the statistics. So a lot of managers are starting to implement these new analytics into their process, and some, you know, many of our clients are further ahead in doing this, and of course, you know, others in the marketplace are perhaps lagging a little bit in the uptake of this kind of thing. But it's an education process as well. You know, I think it's not unreasonable for an active manager to say, well, show me the proof. You know, how do I know that if I implement these trend capture analytics, how do I know that they will actually help to boost my performance? So we're constantly publishing and, you know, doing lots of research and analysis and publishing this research and analysis out there, which provides very strong evidence that trend capture analytics, or at least our approach, does have a very significant impact on performance. In fact, very importantly, just this week, we've launched, Trendrating's launched our own family of indexes. So these are indexes that are effectively based on the MSCI benchmarks, but they're using our approach, the Trendrating trend capture approach, for stock selection. So they're actively managed indexes that are certified and calculated by an independent specialist provider of indexes. And these indexes are published, and they're available to see and track on Reuters and Bloomberg, and also on the Solactive website as well. And if you look at the performance of these indices, of the Trendrating indices, the performance is exceptional. It's consistently exceptional compared to the MSCI benchmarks. And we believe that this is further strong evidence that these opportunities exist, going back to the concept we were discussing earlier about this distribution of performance. If you use trend capture analysis to help you separate the winners from the losers, it will lead almost certainly to an improved performance. So the evidence is there. We're working with a lot of the market to educate and provide information. But the evidence is there, and I think that's part of our challenge, but something that we relish and we're looking forward to.
Excellent. So exciting times.
Absolutely.
Fantastic. Yes, thank you very much for taking time to come in and talk to us. We've been working with you guys now for a couple of years, and it's been great to see you guys evolve into the business that you are now. And it's quite exciting to actually see where you'll be in the future going forward. So I really appreciate you taking the time to come in and talk to us.
Great. It's a pleasure to have worked with you, and thank you very much for today.
No problem. Thank you. Thank you very much. Bye-bye.